Hello, everybody. Hey, it is John King. It is Friday, the 6th of February, and I'm here with our weekly market update. Thank you for joining me. I'm going to dive right into the topics that I want to talk about this week. So the big one that I want to talk about this week really has to do with AI and how AI is impacting the economy, how it's impacting the stock market, and what that's ultimately potentially going to mean to the housing market for buyers and sellers and mortgage rates. But let's start just as a general update. Mortgage rates have been stable. They've been pushing down a little bit. That's good. We're the best rates we've seen in the last 2 weeks, not necessarily the best we've seen in the last year. We had some better rates early January, but they're moving the right direction. A month ago, we talked about President Trump saying he wants to invest money from Fannie Mae and Freddie Mac into buying mortgage bonds, which are supposed to drive down mortgage rates. Well, there's no schedule on when that happens. There's no way to know, but some of the insiders that I read and listen to say, hey, today, yesterday, kind of an example of where mortgage rates are getting better, even though the Treasury, which is often a benchmark that mortgage rates follow, didn't get better. And so that's a good indicator that there's actually money being poured specifically into mortgages. And so whether that's the case or not, there's no way to know, but it's an example of what's happening. So it's stable, what we call range bound, which means it's kind of bouncing between the 5.99 to 6.3 as an average of what we've been seeing, and that's where rates have been averaging across the board. The housing market itself is a different story. So we're seeing, I saw a Wall Street Journal article last week that talked about really that it's really shifting towards a buyer's market. Now, obviously, this is a national article. Every local market is going to be different, but what we're seeing is that buyers are being more selective. They're kind of slowing down. Now, the funny thing is you might be one of my buyers right now that's out shopping for a home and you're like, John, I'm selective. Everything I look at, there's 5 offers and I can't get my offer accepted. Well, that's kind of the anomaly of the best within a price point. So if you think about an individual price point, you're saying, hey, I'm shopping for a home at this price point. I'm shopping for homes between $500,000 and $600,000 in this city. Well, the best priced homes within that point, meaning you get the best bang for your buck, those are moving quickly. There's a lot of people offering on them. But you've got the homes where the sellers are a little bit outdated in their expectations, outdated in their modifications or remodeling of the home. And it's not a gem. It's kind of a diamond in the rough. And those homes are sitting. And those homes are harder to get offers accepted. Buyers are being more selective. So we're seeing prices soften continually. But we'll see what happens after this weekend. So this is the golden weekend. I've been in this industry for 26 years, and we've always talked about Super Bowl weekend being the kickoff to the home buying season. We will see. I will tell you that normally we're slow. November, December, January starts picking up some, and then home buyers say, oh my God, it's Super Bowl weekend is here. It's spring now. Let's go ahead and start shopping for homes. And we see a lot more people writing offers starting after this weekend. We'll see whether that comes true or not. I'm seeing a lot of people out there that are active. I don't see a lot of offers being put together. And so we'll see whether that changes this weekend. But historically, that has been the norm is on Super Bowl weekend. We expect after that to be the unofficial kickoff to the spring buying season that typically lasts through summer. And then we kind of hit a lull in the summer while people are traveling. And then we hit another peak right in fall when people come back from summer vacation and they're trying to settle down before the holidays. So those are kind of the 2 peaks in the housing market that we normally see. And we're heading right into one of them. But one of the things that we got to pay attention to is the labor market. And the labor market is really an important piece. It is cooling down. Now, the jobs report was supposed to be out today, first Friday of every month. We get the jobs report. It got delayed because of the partial government shutdown, but it's supposed to be out next week, I think Tuesday, maybe Wednesday. I forgot which day. Anyway, jobs report is coming out next week. We will see what that says as far as number of jobs being created versus number of jobs being lost. Remember, the government's kind of changed their expectations to say, we're not really looking for more jobs to be created. As long as you're not losing jobs overall, that's fine. Expectations are really what matters. And speaking of expectations, there's some major concerns right now about AI, and probably not in the way that you're thinking about it. In the last few days, there's been a pretty sizable shockwave hitting the stock market related to software stocks like Salesforce. Now, I'm going to tie this into what it matters to the housing market in a minute, okay? But stocks like Salesforce have been hammered. Why? because essentially AI is becoming so good at creating software for people that are not software developers. And so you've got this industry of called SaaS, software as a service, which is really over the last 20 years how all these software companies have made a bunch of money. Because back in the day, you used to just buy a piece of software and you owned it. Like, you own the software. I bought this software. I bought this video game. I own it. And now you're kind of renting it into perpetuity. You're buying software as a service, but the benefit is that they're going to continue to update it and maintain it for you. The truth is, it's a cash cow. They get a lot of money. These software companies make a lot of money out of your small subscriptions or big subscriptions every single month. Well, that model's shifting. Now, people with a little bit of knowledge and a little bit of courage can create the software that replaces all of these expensive programs. I'm in the middle of doing it for some of the stuff that I do, and I tell you, it's powerful. Like, the things that I've been able to accomplish are crazy. And obviously security is critical, and understanding all of that stuff is critical. And so be careful if you dive into this, but more and more people are able to do it. And that is really a concern to the stock market. Now, why does this matter? Because first of all, this is a market story. It's not a housing story, because it's going to impact potentially the stock market. But what it's going to do is it's going to potentially give the expectation of more job losses. It's also going to pull money out of the stock market. So those two things can help housing. They can also hurt housing. So if we expect job losses, well, first of all, we can expect then the federal government would lower interest rates to offset jobs being lost. How does that work? Well, I've said it many, many times. When unemployment becomes a bigger problem, the government lowers rates to get businesses to spend more money so that they'll hire more people. So that is a normal process. So that'll lead to, theoretically, to lower interest rates. But you also have the issue of people having an expectation of, maybe I'm going to lose my job. And if I'm going to lose my job, maybe I don't want to buy a home right now. Maybe I'm not going to make a big decision because I'm an Uber driver and I'm afraid that these robo-taxis are going to take my job from me. And so maybe I'm not going to make a purchase. So there's a double-edged sword here. The same thing has to do with the stock market itself. As people pull money out of the stock market, they put money into the bond market, and mortgages are a bond. Okay. So from a mortgage perspective, bonds matter more than stocks. So stocks, you're investing in a company and you get a share of their growth. In a bond, you are loaning them money and they're paying you back a fixed amount of money. So it's whether you are equity investing or debt investing that matters, and not really debt investing, but are you going on the equity side or the debt side? Well, the bonds are what matter to mortgage rates. So if you're pulling money out of equities, you're putting money into bonds, and that lowers mortgage rates as well. That's good news for mortgage rates. So this AI thing the AI expansion and the concerns that are happening on Wall Street can lead to lower interest rates. But it also can create more problems because a lot of people who are buying a home use money from their investments, use money from what they've invested into the stock market. And if the stock market is pulling back, those people aren't necessarily going to buy. Now, that could lead to lower house prices because you have fewer buyers as well. There's a lot of turmoil going on right now. And so this is where AI can really matter indirectly, because there's lots of components to this. And the simplest thing is the market is changing, technology is changing. And I was listening to a podcast the other day, and it was the CEO of Disney. And he said, no single man has ever stopped technology from moving forward in the history of time. And that's what's happening right now. Technology is moving forward. No matter if you like it or hate it, embrace it or don't, it's moving forward. And it's creating change in how we do things. It's going to create some job losses. It's going to create some new jobs that didn't exist before. 20 years ago, a podcast host didn't exist. A video editing person didn't exist. Well, now we don't know what the jobs are going to be in the future. I do think that we're going to have fewer Uber drivers in the future, because you can have a robo-taxi do that, but you can't have fewer DoorDash drivers. Well, you can with the little DoorDash robot, but you can't really have a robo car drive food to your house because you can't walk it to the front door. And so there's some pieces where maybe they'll figure it out, maybe they won't, maybe it's drones. I don't know. But what I do know is with change comes the opportunity to look for new ways to do things and to be part of those new things. But that's going to create turmoil. That's going to create fear, and volatility and fear creates hesitation. And so that's the challenge that I'm worried about right now. Is Wall Street right now is talking about, hey, we're worried about the stock market. We're worried about how AI is gonna disrupt all of these industries. But from our side, AI creates volatility, which is creating hesitation. Now, don't confuse it. Hesitation does not equal a housing collapse, but it simply means we may not have the growth that we are thinking in number of buyers that want to buy homes, which leads to what I started out with, which is that we're seeing it shift to more of a seller's market. So if you've been in the market to buy a home, it's a great time to buy a home because there's more opportunity out there if you're willing to look for it. If you're a seller, I don't know what the spring market's going to bring, but there's a lot of volatility right now. So what you need to do is you need to watch kind of jobs and inflation and rates. And the best way to watch that is to watch me. I'm going to keep you updated every single Friday, give you updates on what the heck is happening with the market, and just recognize that, Wall Street reacts to all of this stuff immediately. Housing kind of waits. Okay, it takes longer for somebody to make a decision on what they're going to do in buying or selling a home than it does in what they're going to do in buying or selling a stock. So just recognize what you see in the headlines, what they're talking about on Wall Street, and how it could theoretically impact housing. It takes time. Housing is a big ship. Now, Wall Street's a big ship, but individual trading of markets isn't. Somebody's decision to buy or sell their home isn't an overnight thing that most people are going to choose. And so it takes time. And part of that time is investing in good, knowledgeable information. And I hope that I am earning a place in that investment and that I can be the person to help guide you through this process. So I am here always if you have questions about anything. You can post in the comments. You can ask questions right now. If you're watching live, I'll answer them live. If you're watching recorded, then I'll go back and post or catch the questions later. But I want to make it clear, I am here to guide you, to give you knowledge, and to serve your needs if you're looking to purchase a home. If you're looking to refinance a home, if you're looking to pull equity out of a property or to lower your interest rate or payment, if you know somebody in those circumstances, whether you are a first-time home buyer, a seasoned buyer, you want to buy investment properties, I am interviewing for the job of taking great care of you. And you can scan this QR code right up here. You can click on that link up above. And a quick reminder, if you or someone you know lives in California, which a large part of my audience is in California, the California Dream for All program is launching their next lottery reservation portal on February 24th. And so if you want information about that, reach out. You can scan this QR code or click the link. You can click a link on there to get to my California Dream for All page. I've got a YouTube channel all about it. Every Monday at noon, I am updating on the progress and status and updates of the Dream for All program. Every Wednesday night at 7 p.m., I'm doing a full 1-hour live stream that is a webinar that you can log into and you can ask questions. And I really give you the start to finish on how the Dream for All program works and answer all of your questions live. So if you're interested in getting more information about that, please reach out. If you like what I'm telling you, please share this. Please subscribe to my channel and please like this video. Really appreciate y'all listening. Hope everybody has an absolutely wonderful weekend. I don't care who wins the Super Bowl. My Niners aren't in it. So we'll see what happens anyway. And everybody have a wonderful weekend. We'll talk to you soon. Bye-bye.